Are we on the verge of a parabolic breakout in crypto? Is XRP about to explode to new heights? Or is this just another correction before the next bull run? Stick around because today we're diving deep into the market signals, manipulation tactics, and macro trends that suggest the biggest crypto rally we've seen yet is just around the corner. Hold tight. The next move could redefine your portfolio. Let's break down exactly why the crypto space is primed for a massive surge and how you can position yourself to ride the wave to new all-time highs. Let's get started. The current market climate, correction or shakeout. First, let's address the recent market turbulence. Yes, the crypto space has experienced a steep correction, often labeled as a shakeout event. For newcomers and traditional finance investors, witnessing double-digit percentage losses in a single day can be alarming. However, seasoned traders and analysts see these dips as natural, even necessary phases of market cycles. This week has been particularly rough. Bitcoin dipped close to $108,000, Ethereum hovered around $4,400, and XRP found itself around $2.92. While these figures might seem concerning on the surface, they are actually part of a broader pattern. Historically, corrections like these have paved the way for the next leg higher, provided the underlying fundamentals remain intact. Why is this correction important? Such wipeout events help build liquidity around the lows, creating a stronger foundation for the subsequent rally. Think of it like clearing out excess inventory before launching a new product. The market needs to shake out weak hands and emotional traders to solidify the base for a bigger move. Market sentiment and technical indicators. Looking at the daily and weekly charts, the overall trend remains bearish in the short term, but there are signs of resilience. The Fear and Greed Index, a popular sentiment indicator, currently sits at 43, signaling fear, but not extreme despair. Historically, such levels have often marked the bottom of market dips, hinting that a reversal might be near. Furthermore, the market's total capitalization has retreated from nearly $4.2 trillion to around $3.8 trillion in just over 2 weeks. While this represents a significant loss of value, it's important to contextualize. The market has previously fallen to similar levels before rebounding sharply. Key point: the correction is shallow and likely temporary. This is characteristic of a healthy market consolidating before a new rally. The power of macro and institutional factors. Beyond technicals, macroeconomic factors play a pivotal role. The Federal Reserve's signals are bullish for risk assets like crypto. An 84.3% chance of rate cuts in September, coupled with supportive trade deals, such as the recent agreement between the US and the European Union, suggest a conducive environment for risk on assets. Additionally, institutional interest is rising. Ethereum ETFs have seen over $2.8 billion in inflows in August alone. Even amid market dips, this indicates that large investors are accumulating, confident in the long-term potential. Notably, many are shifting their focus from Bitcoin to Ethereum, signaling a shift in market leadership and a move toward altcoins. Why does this matter? Institutional inflows often precede major bull runs. When big players start accumulating, it can trigger a cascade effect, pulling retail investors along for the ride. Manipulation and market dynamics. One of the most discussed topics among crypto analysts is market manipulation. Large exchanges like Binance have been caught liquidating long and short positions at strategic levels, often exacerbating price swings. These maneuvers are designed to shake out the weak hands and accumulate positions at lower prices. For example, recent on-chain data shows Binance's hot wallets dumping Bitcoin and Ethereum to liquidate traders' longs. While such tactics are controversial, they are also part of the game. Market makers and whales often use these strategies to control the narrative and position themselves advantageously. Implication: the current dip might be partly orchestrated, setting the stage for a powerful rebound. Recognizing manipulation is key to not panicking and to positioning oneself for the upcoming rally. The bullish case. Why now is a prime buying opportunity. Despite the fear and the apparent weakness, several indicators point towards an impending bullish surge. Historical market cycles. Past corrections have been followed by parabolic rallies. The recent dip is minor compared to corrections seen in previous cycles. On-chain data. The total crypto market cap has historically rebounded after dips similar to this. From a peak of around $4.2 trillion in April, the market has retraced, but similar retracements have led to new highs. Sentiment extremes. The fear index suggests the market is approaching oversold territory, often a precursor to a rebound. Institutional accumulation. The inflows into Ethereum ETFs and other institutional products suggest that big money is preparing for higher prices. Fundamental developments, continued advancements in blockchain technology, expanding adoption, and upcoming upgrades like Ethereum's future scalability solutions support higher valuations. Strategic advice. This is an excellent time to accumulate stablecoins or assets at these levels, preparing for a major rally. Many analysts predict Bitcoin could retest $106,000 and Ethereum could break above $5,000 soon. XRP and altcoins, poised for a parabolic run. XRP, often overshadowed by Bitcoin and Ethereum, has shown promising signs. Over the past week, XRP dipped to about $2.75 but held crucial support levels. If XRP can maintain its daily closes above $2.85, bullish momentum could accelerate, targeting previous highs around $3.65 and beyond. Why is XRP significant? XRP's low correlation to Bitcoin and Ethereum, combined with its unique utility in cross-border payments, makes it a prime candidate for explosive growth during alt season. Moreover, the broader market's shift away from Bitcoin dominance into Ethereum and altcoins creates an environment ripe for XRP to shine. Market psychology. Many retail investors overlook XRP due to its recent volatility, but the fundamentals remain strong. The current dip is just a reset before the next phase of explosive growth. The broader market, stocks, and traditional finance. While crypto markets are volatile, traditional markets, like the S&P 500, remain near all-time highs with a strong bullish outlook. The stock market's resilience reinforces the narrative of a global risk-on environment, which typically benefits cryptocurrencies. The recent trade deals, rate cut expectations, and inflows into technology ETFs indicate that liquidity is abundant. This liquidity often flows into high-growth assets like crypto during periods of economic optimism. Why a parabolic move is likely coming? All signs point toward a major bullish move on the horizon. The recent correction, often viewed as a shakeout or capitulation event, has created a healthier, more sustainable foundation for the next leg higher. Key reasons supporting this outlook include market sentiment nearing extremes of fear, historically a bullish signal, institutional interest surging, especially in Ethereum ETFs, macro environment favoring risk assets with rate cuts and trade deals, market manipulation tactics, which may have artificially accelerated the dip, setting the stage for a swift rebound. Technical support levels holding strong, especially for XRP and Ethereum, retail investor resurgence, with increased search interest and media coverage. In essence, we are in the calm before the storm. The current dip is an opportunity for savvy investors to accumulate assets at discounted prices, positioning themselves for a potential parabolic rally. Final advice: patience is key. Avoid panic selling or FOMO-driven buying. Instead, focus on fundamentals, on-chain data, and macro signals. Keep an eye on key support levels, and consider gradually building positions in promising assets like Bitcoin, Ethereum, and XRP. The next few weeks could be pivotal. If history repeats, the coming months might see crypto enter a new parabolic phase, one that could redefine portfolios and reshape the market landscape. If you're as excited as I am about the potential for a major crypto breakout, smash that like button, subscribe for more insider insights, and ring the notification bell so you never miss a move. Drop a comment below. Are you ready for the next parabolic run? Let's hear your thoughts. Remember, the best gains often come after the toughest corrections. Stay patient, stay disciplined, and keep your eyes on the prize. The next big move in crypto could be just around the corner, and you don't want to miss out. Thanks for watching, and I'll see you in the next one. Peace out.